Imagine a scenario where the entire financial market is holding its breath, waiting for the Federal Reserve to make its next move. The anticipation is palpable, with many convinced that a rate cut is imminent. But here's where it gets interesting. Austan Goolsbee, president of the Federal Reserve Bank of Chicago, is sounding a cautionary note, warning us that things might not be as straightforward as they seem. In a recent Q&A session, Goolsbee hinted that the labor market might be deteriorating and inflation could be picking up steam again. This uncertainty has led to a wait-and-see approach, leaving many to wonder what the future holds. One thing is certain, though, the rates are a much better indicator of the labor market's health than the raw job growth numbers. For instance, a decrease in rates can signal a slowdown in the labor market, even as the job growth numbers appear to be steady. And this is the part most people miss. The impact of tariffs on price increases is highly sector-dependent. While some industries might be heavily affected, others might barely feel the pinch. As we approach the September meeting, Goolsbee has made it clear that it's a live meeting, and he hasn't made up his mind yet. This leaves us with more questions than answers. Will the Federal Reserve cut rates, or will they take a more cautious approach? The markets are convinced that a rate cut is on the horizon, but Goolsbee's remarks have thrown a wrench into the works. So, what do you think? Will the Federal Reserve cut rates, or will they surprise us with a different move? Share your thoughts in the comments below. But before you do, consider this. What if the Federal Reserve's decision has a ripple effect on the entire economy? What if the rate cut leads to increased inflation, or worse, a market downturn? The possibilities are endless, and the uncertainty is palpable. As we wait with bated breath for the September meeting, one thing is clear: the Federal Reserve's decision will have far-reaching consequences, and it's up to us to stay informed and adapt to the changing landscape. So let's dive into the details and explore the possibilities. The fate of the economy might just depend on it. And this is where the controversy begins. Some argue that the Federal Reserve should prioritize job growth over inflation, while others believe that controlling inflation should be the top priority. Where do you stand on this issue? Do you think the Federal Reserve should cut rates to boost job growth, or should they focus on keeping inflation in check? The debate is ongoing, and we want to hear from you. So go ahead and share your thoughts. Do you agree with Goolsbee's cautious approach, or do you think the Federal Reserve should take a more aggressive stance?